Good afternoon. How are you guys?
Good.
How's it going, Thomas?
Good, Annabelle.
Good.
I'm going to try to make some of it, but I just
Good.
sent for lunch. So
Perfect.
how are you
Perfect.
doing?
I'm doing well. Thank you so much for asking. Glad you made it. I'm sure today will be very valuable information for you. So thank you so much for joining
Okay.
us.
Yeah, well,
Hi,
thank you.
Sophia.
Thank you.
Yes. Hi, Sophia. How are you?
Hi, Annabelle. I'm good. How are you?
I'm doing wonderful. Haven't forgotten about you. I've been talking to a colleague of mine, and they'll be giving you a call in the next day or two.
Okay, no problem at all. Thank you.
You're welcome. All right, we'll just get started as other people come in. Let me get this going here. All right, so good afternoon, and thank you guys both for joining me today. I am Annabelle Pacheco. I am an investor and a real estate broker, and I've been in business for over 24 years. And really the goal of this talk that I do on a weekly basis is to share with you in details the steps that I took in purchasing my first multifamily deal in hopes that you guys will also do the same thing. I'm not trying to sell anything or offering anything. I'm not a financial advisor at all as well. And I'm just sharing, my story with you guys in hopes that this is something that you guys can use this platform as well, share information, and that we all learn from each other. I started my career in the mortgage industry back in the mid-90s. And I have purchased over 100 properties throughout my careers. What I did was rehab, fixed, and sold, and kept some that we leased out as just rental property. And in 2001, I built a 150 capacity restaurant from ground up. It had a staff of about 15 people, including managers, chefs, and servers. It was a full blown restaurant, liquor license and entertainment license. We did that for about 8 years and sold the business and went straight back into real estate. And in the last 10 years, I have focused 100% on representing clients in the residential and the commercial real estate sector. I purchased my first multifamily property in 2010, and what drove me, it had always been a goal for me to try to buy something that would give us cash flow, and that was the perfect move in 2010. So we were really looking to create cash flow and generational wealth. So we thought, how can we make our money work for us? And here are the reasons why I invested in multifamily property. And I hope that it inspires you guys to do the same thing. So number one was cash flow, right? I was looking to see, how can I make my money work? What can we do where something is producing income for us? And multifamily absolutely does that. And for those of you that don't know, but just how do you figure it out really, really quick? Cash flow is your rental income minus your expenses. That's what you're making on a monthly basis. The second thing that was interesting, or what we thought would be pretty cool, was, hey, you're going to have our tenants pay off our loan. And that is something, that you honestly, you don't even feel it, right? Your payments are coming in, tenants are paying, and you're paying down your loan. So it was a great way for us to, give me 1 second. It was a great way for us to create, again, income, because you're now not only you're cash flowing, but you're also being able to pay down your loan. Second was appreciation. And I'll share with you guys a little later how this benefit, it was a great thing. And appreciation is when the property appreciates in value over the long run. The other thing that was really great about multifamily was the tax benefits. So you have the opportunity to depreciate and to do a 1031 exchange. So the depreciation allows you to expense a portion of the physical structure each year on your taxes. And the 1031 exchange allows you to defer the capital gain. So if you have a property that you've created, I mean, it's appreciated considerably, and you want to take advantage and use that, you can sell the property, do a 1031 exchange, use all that capital to purchase the other property and not pay any capital gains. And there's no limit to how many times you can do this. Any questions so far?
Nothing yet, nothing yet.
Perfect. So what I purchased was a value add multifamily property. And what does value add mean? Value add is a property that may need some additional work in order for you to be able to add more value to it. So we purchased a property for $850,000. It was 34 doors. It did need a lot of work. We were able to, at that time, when I found this property, I was able to deal directly with the seller. The seller was an agent, and the buyer, myself, I was an agent. So we really negotiated amongst each other. There was no real estate representation. It was, we were representing ourselves. And at that time, nowhere in the listing did it say that he would do a seller finance. And what does seller finance mean? It means that if the loan the current owner has, or maybe there is no loan, he can now be the lender and you make them payments on whatever dollar amount you agree. So we had agreed on an $850,000 purchase. We gave him a $350,000 down payment. So we gave him $350,000. He was the bank for $500,000. So he gave us a loan for 2 years, and we made payments to him for 2 years. And during that time, it allowed us to remodel and to update the units and increase rents. And when you remodel and you update units and you increase rents, you automatically increase the value of the property. So that was our goal. And when a seller finances for you, your loan process, like the loan paperwork and all of that, is eliminated. It's a much easier process. They're banking on the fact that you're giving them a hefty down payment. I mean, they still own the property. If you don't pay, they can take the property from you and you lose your down payment. So it may or may not work for certain sellers, but for this particular seller, it did work. So I'm just putting it out there. If it's always worth asking, even though they may not be offering it to you, but it's always good to ask, hey, would you consider like seller finance? And some sellers don't want to have to do a 1031 exchange and roll that money over. Maybe, maybe they're interested in carrying a note and getting paid on it. So like basically they're a bank. So after the second year, because we had a 2-year note with him, after the second year, we refinanced the property and it was actually appraised at $1.6 million. So we bought the property for $850,000, and in 2 years, it pretty much almost doubled. And again, it was a lot of the repairs that were done to the property, all the updating, and all the increase in rents. So what we did is we actually we acquired a loan for $1 million. we were at a 65% LTV. And to this day, we have zero money invested in this property because we got all of our money, our initial investment and the repairs, we got all that money back. And today's value is somewhere around $2.7 million for this property. So I know a lot of times people will say, well, wow, this is a home run. And yeah, you know what? I think this was definitely a home run. It did really, really well. They're not easy to find in today's market, especially 30, 40 plus doors is a very competitive. But if you guys are interested in 2 to 4 units, I think that there's still very, very much opportunities out there. Thomas, maybe not here in California, definitely out of state, but they're available and they would be a great opportunity. I know, Sophia, you're looking to do that, correct? Like a 2 duplex?
Yes, duplexes or triplex. Yeah.
Exactly. And I think that the area you're in, Atlanta, I think you're going to find some really good opportunities out there.
I'm very much looking forward to it. I really can't wait. I haven't been able to find the kind of properties I have in mind myself. So I'm trying to reach out to a few commercial agents who might be able to maybe help me a little better.
Tell me a little bit more about what you're looking to do.
Well, I'm thinking about purchasing like either a duplex or a triplex and live in it myself and then rent out the other or the 2 other units.
Got it.
Yeah.
Okay. All right.
At least for the first 2 years, and maybe then, you know, move on, like move somewhere else and then have it as a full rental property.
Perfect. Are you looking to go the FHA route or conventional route?
Conventional. Yeah.
Got it. Okay. Okay. Well, I'm connecting you with someone who's been in business for over 30 years, knows the market very well. I will make sure that you guys connect between today and tomorrow, and hopefully they can help you.
Yeah. Awesome.
All right.
Thank you
Very
so much.
good. You're welcome. And Thomas, here in California, duplexes, triplex, quads, they're not cheap.
Okay, yeah.
And if you want to do something, I would say, usually they say when you go out of state, you wanna do more than like 10 units because it just doesn't make sense financially to maintain the property. It doesn't make sense for 4 units and you have to fly somewhere, 4 hours or 3 hours to get there. But one thing that I am looking into is for us here in California, Nevada. Nevada has some markets, some areas that they are in like gentrification. So they are actually offering money to developers or people that come on board and want to build and better and beautify their area. They're offering assistance.
Okay.
So something to look into,
Okay. So yeah, I guess I just got to get started, Annabelle. You were saying to just find the place, and then I look at your numbers here and I say, wow, I can't really compete with the cash down payment, that kind of thing,
Right.
But you got to start somewhere, I guess. So, and I'm always willing to learn and, do the best I can,
Right. Well, and the other thing you also want to do, if you don't have all the cash yourself, partnering up with people is very, very common. I guess this is my philosophy. I'm happy making a percentage of something versus 100% of nothing.
Okay.
So,
yeah, let me look into that too, Annabelle. I actually was going to go into something a little while, maybe a year or so ago, but it was a conflict of interest, with like flipping homes. But it was, it was a conflict of interest. but I had investors that were working with a contractor, but it didn't go through. But I have talked to a couple investors. One he doesn't like the Zoom thing. So maybe if we can sit down somewhere else.
Let's meet for lunch.
Okay, let's do that then. I'll talk to him again to make sure he is,
Yeah.
he is, and then I'll talk to the other one. The other one, when I talked to him, he mentioned another investment because he's more of a professional salesperson, or he gets investors, and he mentioned to me about a place in Houston, I believe. It's going to be a commercial, and you have to. It's for what do you call that? The investors, the million or more. What do you call that?
Like a syndication?
No. Anyway, it's going to be lower level. It's going to be commercial, and then.
Oh, so they'll have retail and housing mixed?
Yeah, and I think the initial is like 25,000, and then, but he didn't really go into that too much. But he told me about his thing, and I told him what I was starting to do with you, to see if, so we'll see in the future. But he's the one that he knows more investors than I do. So anyway,
Let's definitely. I'll reach out to you and let's meet for lunch and
Okay.
meet. I know that sometimes that's easier for people,
Okay.
and I'm open to that.
Maybe so, Annabelle. I
Perfect.
appreciate you getting me started though, and getting me kind of interested in knowledge. You're teaching me, so I'm seeing that it can be done, and
Yeah.
wow, it's pretty good.
It
Anyway.
can. I mean, look, it's not easy, but nothing in life
Yeah,
is easy.
that's right. Yeah.
If we go out and look for it, we'll definitely find it.
Okay.
All right.
I'm willing to work whenever I have free time. Yeah.
Perfect.
All right.
So here's a picture of the property. So
Okay.
there's two buildings, right? We've got these, the picture you're looking at is they're all 1 bedroom, 1 bath. There's 24 units there. And then these are 10 units here, which are 2 bedrooms, 2 bath, 2 stories. And they each have like a little patio area. So today I wanted to talk about getting pre-approved.
Okay.
And I think that this section here, these items here are just like to quickly find out if you qualify for the type of loan that you're looking for. This is only going to give you guys a broad picture, and pretty much it's going to give you a positive or a negative indication as to the actual feasibility of the loan that you're trying to get. So the things that you're going to want to ask for when purchasing multi-units is the trailing 12 month. You want a month-by-month operating statement, a profit and loss, and you want a current rent roll. Now, the borrower's net worth must be greater than the loan amount, and the borrower's liquidity is greater than 10% of the loan amount. So it's very important that when you guys understand that when you're applying for a loan, the liquidity has to be greater than 10% of the loan amount. Many times, how do people do this when they're buying, 100 units? They may not have the liquidity, so they bring in a partner that will represent the liquidity part of the deal. And maybe that partner gets a percentage of the deal, but that's how a lot of these syndicating companies work, right? If you're trying to, you got to give a little bit up if you're trying to make some money and work with a group of people. That's just the way that this works. So these are the items that you need when you're applying for a loan and you want to get like a formal quote from the lender. And you have to understand that there's a formal quote or a term sheet that you can get from a lender. And basically that term sheet, the lender stands behind it. And these quotes will be subject to full underwriting and pretty much completion of all the third-party reports. So what's required to get a formal quote? You have from the property itself, you want to get the last 3 years operating statements, the trailing 12-month, the month-by-month profit and loss, the current rent roll. You want to get a summary of CapEx to date. CapEx is capital expenditures. Any big repairs that you have done, you use that as capital expenditure, not as an expense to the monthly profit and loss. Because if you put it in as an expense to your profit and like your month to month, it'll bring down the value of the property. So usually you get a list from the seller of all capital expenditures that they've done, because these are usually one-time expenses, large expenses that are done to the property. Make sense? And then
Yes.
okay. And then pretty much what you want to make sure you get as well is you want property details. You're going to need photos, property address, the description, the unit mix, the age, the construction type. That's on the property, okay? And this is for you guys to actually get a quote. And then you have like the stuff that you will have to provide. You'll have to provide the name of the entity. Many times when buyers are looking to purchase these in multifamilies, they will create corporations or LLCs. And then they use that as part of who they're going to actually be applying the loan through. So you want to provide the organizational chart, who's part of the organization. You'll provide financial statements for the guarantor. So if you are one of the borrowers, you'll need to provide your financial statements there as well. If you don't have the financial backing, but you know your strength is somewhere else, then you want to bring in a borrower who has that financial backing. You want to provide a resume and a bio of, you know, your experience. What have you done in the past? What's your strength, right? The bank wants to know before they lend you any money. They want to know, do you have experience doing this? They want to feel secure that you'll be able to do it right. Property management. Let's say that you're not going to manage the property and you're going to hire a property manager, then you want to make sure that you provide that property management company information. And again, these lists, what I'm listing here is for you to be able to get a quote, a formal quote from the lender. And any individual owning more than 20% of the GP will be underwritten as well. GP is the general partner. Okay, LP is the limited partners. They're not underwritten. They're not part of the deal. They're just listed as the people that are going to be partners in the transaction. And for guarantors with limited experience, a strong property management company will be required. So in my case, when I applied for my loan after the 2 years, they actually asked me for a resume. They wanted to make sure, right, that I had experience, that I knew what I was getting myself into. They needed to feel comfortable. And I was able to list, I may not have had the experience of managing 34 units, but I had the experience of rehabbing and flipping, leasing, managing those properties. So I had the experience throughout, and I just had to put it together in a really nice resume so that the bank would feel comfortable enough to be okay and let me manage the property. Any questions?
No.
Right.
So Annabelle, for someone who doesn't have the experience, basically you have to get a management company. That's what it is.
You will have to get a management company, and we're talking 10 units plus. If you're looking to buy 2 to 4, you're fine. They don't require a management company.
Oh, okay, okay, all right.
So this is for like larger number multifamily properties.
Okay. Okay.
Good question though. So, so in addition to the items listed in the formal quote, the following documents are also required. So in the course of underwriting and reviewing third-party reports, there are other things that can present themselves that will require additional documentation for underwriting items, okay? And so I'm gonna kind of just give you a rundown on the following items that the banks will need before closing. So the borrower, if it's coming from a borrower, they're going to need a W-9 for the borrower, a final organizational chart, okay, articles of the organization. So if you form a corporation, corporations always come with articles, so you will need to provide the articles, executed operating agreement, and the verifications of the EIN. Okay. So what you're going to require from the property, okay, that was for the person. Now for the property, you're going to require current rent rolls, right? All months up to and including the closing month. You're going to require current operating statements as well, all up to date and including the closing month. You're going to require your ALTA survey, which is your title, copies of all commercial leases, anything that that property that you're looking to purchase, any leases that they may have, let's say could be laundry, you know, maybe you have laundry services there, electrical, many different leases that could potentially be required. You want to grab all of those and give those to the lender. You want to give service contracts, right? Trash removal, pest control, landscaping, anything that you have that your property is going to require, all of that information you provide to the lender. And that's part of what they use to be able to actually give you guys a formal quote. So title, here's additional stuff that you guys may want to just, you know, remember it. I don't know if you're writing it, but title, you want certificates of occupancy, rental licenses, proof of building code compliance. This is really important, and I'm glad that the lenders will ask for this because it gives the buyer the opportunity to find out if the building is under any kind of code violation. And so again, these are important things that when you're purchasing, if you don't ask for these things, and let's say you don't know any better, I mean, it's got to make financial sense for you to take the risk and take a property with code violations. And I'll tell you guys, when we purchased our property, that building had code violations. It was a mess, but we knew the price we were getting on this building, and it just made it was like worth the risk, very much so worth the risk. Proof of building codes, copy of the deeds, zoning letters. You want to make sure the property is zoned for, you know, let's say 2 units or 4 units. So Sophia, this is something that 100% you want to pay attention to when you're purchasing the zoning. Sometimes people will have single family residence zone property, but maybe they added another house on there, but it's not registered as a duplex.
Right, right.
So you want to make sure the zoning is there for what you're looking to purchase.
Right. Good point.
Designation of counsel. You know, many states don't use escrow; they use attorneys, and also insurance agents. Right? Who you're going to select who you're going to use for your insurance agent.
Annabelle, Sophia, I got to run to lunch with my wife here. Anyway, thank you again, Annabelle. Really appreciate it. We'll have to get together. I'm taking as much notes as I can.
You got it. You got it. Thanks, Thomas. Take care.
Thanks, Annabelle. Have a good one.
Perfect.
Wow, it's just you and I now.
William's on here as well.
Oh, okay, awesome.
Perfect. Hi, William. How are you?
Hi, good afternoon.
Good afternoon. How's it going?
Crazy, but I'm here.
That's good. That's good. Well, anything new on your end?
No, I got to apologize to you, but I'll let you finish and I'll explain.
Perfect.
I'm having technical issues.
You're having technical issues?
Technical issues, and I was doing some due diligence, and I should have done it before I spoke to you. I basically looked back. So I basically, in turn, what I promised to, send you, but I had technical issues uploading it. And then in terms of, I was trying to do some due diligence before giving you more of the information. But I'll explain it. Let me not interrupt. There was a flow here, so let me not interrupt.
You got it. You got it. So, going back, the guarantors they will ask you for the following information. So the SREO is the schedule of real estate owned. So if you own other property, you're going to list all that information as part of, your building. You're letting the lender know who you are, right? And you provide all this information. If you own other property, this is the section where you're going to put all of that. Authorizations to release banking credit information, right? They're going to run your credit. They're going to want to look at your bank for proof of funds and verification of deposits, your bank statements as well. So property, and I know I've mentioned this already, but this is really important. When you are applying for your loan, the current rent rolls, the operating statements have to make financial sense in order for any lender to lend you the money. So once you get to this section, like when we're asking the seller for rent rolls and operating statements, and now we're going to get, ALTA surveys and commercial leases and laundry leases, you've already kind of taken a look at a preliminary look at these numbers, and the deal makes sense. Now you're just really fine-tuning it, and we're making sure that you're going to get all the information that's needed, because now the lender is going to require it. Okay, the lender has to do their due diligence as well. But you don't get to this point unless you've already done your due diligence and it makes financial sense. Make sense?
Yes.
Okay. That's so again, they're going to ask you for commercial leases, any leases that you may have, laundry leases, service contracts, trash removal, pest control, landscaping, if there's a pool service, title again. Now, certificates of occupancy, rental leases, proof of building code compliance, copy of the deed, zoning letters, designations of councils. This is on the property, and this is property management. So the property management company, they're going to ask stuff like, hey, show us a list of the current properties that you're managing. They're going to want to look at the management agreement, the executed management agreement that you've made with that management company. Their marketing plan. They're going to want to see marketing material, sample leases, expenses shared with other properties, and their payroll analysis. So very important that you guys understand, when you are getting pre-approved, it's a combination of different things. It's not just you. It's gonna be you. If there's anybody else that's coming on board that's gonna serve as the guarantor, additional guarantor their property. If you're not going to manage it and you're bringing a property management company, their information as well. So it's a pretty detailed, I mean, if you guys could see so far, I mean, it's pretty detailed, the information that you have to provide to the lender.
What happens if the very fact that prior to property management, but everything else is in order, but they don't like your property management? You would have to fire your property management and get a new one?
Yeah, you'd have to replace that one with another property management that is qualified. When they don't accept that property management, it's because either they're not qualified, they're not providing sufficient evidence to the lender to feel comfortable enough that they're going to be able to run the place.
Okay.
But you should be able to, you know, the management company, any management company that that wants to take on a building, I'm sure they're going to have a really good resume, and they're going to be able to show all of this, because they would have no business managing all those kind of you know, doors if they didn't have the experience. Have you come across something like that?
No, just out of curiosity. I mean, I know a couple of management agencies I don't want to deal with, but in terms of whether or not I wouldn't hire them, but just in case you do all your due diligence, put everything in order, and then you happen to have a management agency, yes, for several things that they in turn have done well, but what happens when it comes to this particular property, and you have to go to this particular bank in order to get approval?
Right.
Do you?
Well, they would have to give the bank, the bank will probably ask for additional information that they would have to provide in order to stay on board as the approved management company.
Okay.
Yeah. And I don't know, I mean, so when I purchased, I had the opportunity to provide my own resume as self-managing owner. That's why I provided my resume, because I didn't want to have to bring in a management company. The property, you know, 34 doors, the condition that it was in, we needed to put a lot of money in. There just wasn't enough room at that point to hire a management company. So we decided to form our own company with an on-site manager and an on-site handyman.
That makes sense.
That's what we did. We saved on the, you know, the cost of having a management company. We give them a discounted rent as part of our deal. So both of those 2 units, so we have out of 34 units, 2 units are discounted because we've got the handyman in one and we've got the manager in the other. And it just worked out a lot better for us.
Okay.
It just made financial sense for us. Third-party reports. This is always something that banks will ask for. Termite inspection, appraisal, phase 1 environmental, and the project capital needs assessment. So these are just, you know, these are third-party reports that you have nothing to do with. These are just ordered and are provided to the lender. And really important here, what I just described to you guys was or is the path to funding a non-recourse multifamily loan. And a non-recourse loan is, in the case of default, it does not allow the lender to pursue anything other than the collateral. However, a recourse debt holds the borrower personally liable. So that's really important. I'm not sure if you guys understand that.
Yes, yes.
Okay. William, do you understand the non-recourse and the recourse debt?
Yes.
Okay, perfect. And pretty much, just so that you guys know, from initial, like the initial start, till your commitment, until you rate lock, you're able to rate lock, to do a rate lock. It's generally about a 60-day process that you will probably need in order to actually be able to close your deal. So let me, I'm gonna stop sharing here for a moment. And so welcome, Kathy.
Hello,
How are you today?
pretty good.
Good, good. So we're just talking, we're talking today about pre-approval and applying, and what are the necessary items and steps required to taking for pre-approval. Where are you in the process? Are you looking to buy multifamily? Or are you looking to buy 2 to 4 units?
Right now, I'm trying to get all the information. And then
Perfect.
once I get the information, then I'll know what direction to go.
Fantastic. Very good. And what area are you in?
I'm in Louisiana. This is Madam.
Very good. I see. How are you, madam?
Fine. I'm getting better. I had went on the webinar last week, but it didn't send me to the new link. The new
Oh,
link wasn't on there yet.
last week? I was
Yeah.
on last week. 2 weeks before is what we had problems. We had some
Yeah.
technical issues 2 weeks before.
Yeah, so I said today I'm gonna try it again and hopefully it'll send me.
Perfect. Good. And I'm going to make sure that we don't have any more of those issues. But like 2 weeks ago, it was just horrible. My computer went up. It started updating on its own at like 10 o'clock in the morning. And my updating didn't end till like 5 or 6 o'clock that day. So I was,
Okay.
yeah, I was completely out of no way to do this presentation at all. But okay, well, good. I'm glad you made it back, and here to help in any way I can. I think really today my message was on the pre-approval, and pre-approval is different if you're buying 2 to 4 units because it still qualifies as residential financing.
Okay.
5+ is when it changes to commercial. So
Okay.
Sophia, if you're looking 2 to 4, you can still look at residential financing for 2 to 4. I think it'll probably be easier when you're starting to purchase, unless you're looking to put a hefty down payment. You don't need to go FHA, you can go conventional.
Good. So none of these requirements actually apply to someone who's looking at less than 5 units.
Correct. Yes. 2 to 4 is considered 100% like residential financing. It's very very easy, less requirement, and I mean obviously it's backed by your financial, plus they'll take a percentage of the current rents of the other units. They take 75% of the rents. So if you buy, let's say 4 units, you're going to live in one. They will use the rental income from the 3 other property. They'll give you 75% of that rental income that you can actually use as income plus your income to get the loan to purchase that property.
Can I have a question on that?
Yeah.
I've had investors who, I mean, I guess in terms of not the traditional banks, but more of the lenders, private lenders, who frown on if you live in the units, that they discourage if you live in the units, they won't fund.
Private lenders?
Yes.
Really?
I mean, I had several cases where they'll ask, are you living in the units? And one of my clients said yes. And they said, well, we don't fund those units if you're living in the units, if it's 2 to 4.
So okay. And I can understand why, because that means that they're now, remember, it's different financing. You're looking at kind of like hard money, personal like a private loan very different than your traditional bank. And the reason why they're saying they don't want to do it is because if you're living in there and you are protected, if you want to not pay, it's going to be harder for them to, they're going to have to go through the whole eviction process, and you'll have the right to stay in a property for a lot longer if you're owner occupied. So it's
Yeah.
very, very different.
Okay.
I think, yeah. I mean, I think in Sophia's case, if she's looking to purchase and she's going to go down the traditional lending route, there's no reason she can live in one and they can rent out the other three, and she can use the income of those other three to qualify for the purchase of that property.
Okay.
It's actually many, many people will take advantage of the FHA loan. And why is because only 3.5% is required. So they go in, they buy 4 units with 3.5% down payment. They now got into this property with minimal down payment. They can use the other 3 rental incomes to help them qualify for the purchase of the property. And you're entitled to 1 FHA loan.
I see.
So it just makes sense. If you have the money and you don't need to go FHA, then you don't have to go. But if you are limited with cash, you can go FHA. You buy, let's say you spend $300,000 on a property or $400,000 on a property. 3.5% is different than 10%. I mean, you're saying,
Yes.
a considerable amount of money that you
Yes.
can maybe move. And if you're married and if you're married and your credit aren't mixed together, well, then 2 of you now can go out and buy 2 separate get 2 FHA loans. So it just depends. It just really depends on how much money you have. If you're looking to put 5-10% down, then no need to worry about the FHA. But if you want to save on the down payment, you could go FHA. It's a great, there's some great programs, and I know a lot of people that have started with the FHA route because they've put less money down. And I don't know what the loan limits are in Atlanta, Sophia. I know every state is different. You could find out what the FHA loan limit is in Atlanta and see if it even makes sense.
I mean, I know right now the market is so competitive that, not even sure if with an FHA you can get something like.
Yeah, no, it is. You're right. It is very competitive. The only way that you would be able to get something if you went FHA, and then it wouldn't even make sense right now, is removing the appraisal contingency, which here in California, Sophia, offers, all of them are coming in. The ones that are getting accepted, no appraisal, no loan, and like a 5-day inspection, only 5 days to inspect the property.
That's just absolutely crazy.
It's insane, but you know what? I'm doing that like on almost 100% of my properties. You won't get an offer accepted if you don't remove appraisal and loan contingency.
Wow.
So yeah, and prices in California are not cheap. I mean, my clients are overbidding. I've got a couple right now where purchase price, list price was $888,000, and we came in at $930,000. We waived appraisal and loan contingency. Thank goodness the appraisal contingency came in, it appraised. We were worried there for a moment, but it appraised. And the house, and another house that I showed, I mean, they're all of them, no appraisal and no loan contingency. So hopefully you can get yourself into a property. I don't know. I think Atlanta's market, I know it's still crazy, just as bad as California, but the prices are not as high as California.
Right.
So you still have a really good opportunity.
In Atlanta, I mean, I have friends, I guess, and I've been blessed with in terms like 15 to 20 states. But one of my partners, business partners, actually is in Atlanta, and we talk from time to time, as well as just got off a phone call with someone who's purchasing property around that area in the outskirts versus in the city. But a lot, there are those that are still worth looking at it are, bank owned and foreclosures that in turn might be beneficial. Some want to already, the realtors properties, but there are some that are at a decent rate, that are bank owned. It
So do
just
you
takes
have,
longer to get.
do you have the contact for those bank owned properties in Atlanta?
I have, my cousin does. She basically, because she's been having a friend of his who just buy properties that are bank owned or foreclosures, and he basically goes to the auctions and purchase them in that respect or so. And that's what we're discussing now, looking at that, because it is a competitive market, especially when you start talking in terms of looking at properties, because people are moving South Carolina, Georgia, North Carolina, and those places like that. And so those are competitive markets.
Well, why don't you have your cousin join us? He could share. I mean, there's people on the call that would be interested in purchasing a property out in that area. I mean, Sophia is one that's looking to purchase. And I mean, if there's some opportunities, why not have them come on, share, bring deals on this call. That's what we want.
Okay.
Yeah, that'd be great.
That would be amazing.
It is. That's exactly, I mean, my goal is for this call to grow, and that, you know what, if someone's got a deal, wherever it is, that we can connect and we can make it. William, there are tons of people that are looking to buy. And sometimes, you know what, don't have that connection to someone that has access to bank-owned properties. So great opportunity if or you get the property, get the info from him and share it. That'd be awesome.
Okay. So long as I can upload it, like I'm having trouble with the other problems that I have. But that's when I'm going through some technical people to make sure I can send things or present things in that respect or so.
That'd be great. Work on it. Next week we could, maybe you could, if there are properties or any opportunities, share them next week. That'd be awesome.
Okay.
Fantastic. All right. Well, I am pretty much done with my presentation. If you guys have any other questions, I'd be happy to answer them for you. If not, I will have some more good stuff next week. And again, I meet every Wednesday at 2:00 Pacific time. And you guys have my email. If there's anything I can do in the meantime and I can connect you with anyone, please feel free to reach out to me. Sophia, I promise you someone will reach out to you between today and tomorrow, 100%. And let's communicate, let's grow and bring deals. If you guys have opportunities, or if you guys are struggling with something, bring your questions on the call and we can together figure it out. And you know what, let's all be successful.
Awesome. Thank you so much.
Yes. Thank
All
you.
right.
Yeah.
Thank you much.
You're
Thank you.
welcome. You're welcome.
Thank
I'll
you.
see you guys next week. Take care.
All right.
Okay.
All righty.
Bye.
Bye.
Oh, the question before you get off.
Yeah.
is, I got the review, like for instance, what you're talking about today, something I missed, and I saw something that came up. Is there a recording of it that will come up later?
Yeah. I'll send a recording. The recording goes out, I think, tomorrow. But yes, we'll give you a recording of this.
Okay, I just know because I saw it from the last week and I was just making sure that it wasn't something that, sometimes you get certain things that it's not. And I wanted to make sure it was from you.
Yeah,
And
no,
so-
I did. I'm
okay.
sending them out. Yes.
Okay, good.
All right.
Okay.
Fantastic. Have a great
Annabelle,
day and the rest of the week.
Annabelle, do you
you
also
too.
send these slides?
Say again.
Do you also send the slides?
The slides are recorded, so you'll get a copy of it.
A copy. Okay. Awesome.
Yeah.
Thank you.
All right, you
All
got
right.
it. Take care. Have a
Thank
great
you.
week. Take care. Bye-bye.
Bye-bye.
Bye.